In this video, we're going to be taking a look here at some important levels on the S&P 500. Not only that, we're going to be taking a look at the Dow, which has been outpacing gains on the Nasdaq. We will be checking in also here on this nice bounce off support on the Nasdaq. We'll be looking at the markets today. What's going on, everybody? This is Jordan with Conquer Trading and Investing. If you were here this morning, if you were watching the live stream this morning and you're here now, go ahead and smash the like button because that was a phenomenal session we had together this morning. I really enjoyed that one. And the reason I bring that up because this morning, as price was trading again down. Oh, by the way, this is the exact reversal. When I talk about volatility is back, we're seeing some larger daily price ranges over here, as well as so we're seeing the range starting to expand, but we're also seeing lots of fake outs. You could see yesterday morning, which is why I started off with this. We traded up in the morning and then had a strong reversal closing down and down towards the lows. The opposite is happening today. This morning, you were coming down into the support here at 31.23. This morning on the live stream, as price was trading down here in this low, so this was a big fat red candle. We were talking about the fact that we were looking for price to resume up at any point and hoping that we made it even down as far as the support line over here or perhaps into 30.30, but we're looking for a resumption up and not necessarily to trade it in this particular moment. Not being positioned in the S&P is actually a really, really good position. If you did take either the long here this morning, because some traders got faked out. They took the long here actually this morning, and then price reversed hard on them. They sold out before we even broke the support, and then price faked out again. We're seeing two big fake outs in a row, and basically we're back where we started. You could see that price now is around the 32 was our take profit level was 3,200. Here we are again today. That's why it makes sense being out of the market. I think waiting for perhaps at this moment, waiting for a breakout here above the 32 resistance. If we get that, if we get a breakout above this area, at that point, then we continue to look to position ourselves in and get the resumption up as we do extend another leg perhaps further, as was, again, the areas of support is when we were last leaning in. If we do get another one of those touches, that will be a nice place to look to lean in. Was today. For me, it was a little aggressive. I wasn't looking for that. If anyone did, and they're holding this, you're on the right side of the market, but the question remains, should you be in the market right now? Looking, and again, going back to yesterday, we're looking for the markets to consolidate within this range. That's what they continue to do so far. Let's wait and see which way we break, right? Whether we do break out over here to the upside, which was something that we want to definitely be a part of. At that point, was it possible we'd be testing all-time highs on the S&P? Of course, it's possible. The Fed is printing right now. The asset bubble is still being inflated. The asset bubble is still being inflated right now. What about on the downside? When are we really going to be concerned that we should be participating in what looks perhaps to be a substantial sell-off? Well, that's not happening right now. We would need to see a narrative change, meaning when you see good news released, the market sells off that day. When you see bad news, the market sells off that day. Right now, we're not seeing really the risk off going into the currency markets. Japanese yen was weak on the day, no question about it. We're not seeing any type of inflows into risk off. So risk on, here we are, but waiting for this breakout. On the downside, we would have to have a break at least of this trend line. And as long as we're above it, we're just uber and continue to be uber bullish, looking for further upside gains. If we do break below that, at that point, we'll see that the true trend is having a downward impulse. It'll be turning negative. And maybe on the first pullback of that, we would want to get involved in case something greater developed. At the same time, be looking to position back into the market any opportunity you get of a negative impulse right now. As long as technically this stays in good shape, which to me, this is really still in good shape. Even better that we have a little bit of a rotation out of tech into the Dow. That's really nice to see the Dow leading, making gains on the way up. I think that's a lot healthier than the Nasdaq just continuing to really explode to the upside. You're looking at a live screen here, and I understand that the chart is not loading. There it goes. Here now we have the Dow over here, and you could see that it was up here 2% today, 2%, and looks to have nice momentum. You could see the pattern that's developing here, right? And now it looks like we're breaking out here to the upside. And then at that point, we're going to be looking at the June highs, which remain a target. S&P has gone ahead over here, and you could see putting up some nice gains. It's a little bit closer, as it already took a first look over here at its June high. It seems to be coming back up and testing. I don't know that it breaks out right now. I don't know that we get the breakout like right now. When we get the breakout, we'll be looking to trade along with it. I think right now, as we're coming to the apex, this conclusion where we're going to get either a breakout or break down, it's good that we've taken profit and are on the sidelines right now, and we'll be able to then to reestablish from a neutral position on such a big breakout is a really good place to be. Checking in on the Nasdaq, and you could see also taking back all of yesterday's losses, some strong, or say yesterday, overnight's losses, some strong price action here on the Nasdaq. It's very healthy. Price came into this last area of resistance, turned into support, and it held it again. So that's a good sign, that's for sure. Continue to be looking to buy any pullbacks into support for the foreseeable future until we break down. We're not breaking down. Every little pullback is not a breakdown. It could always be the start of something bigger, but generally speaking, we're looking at as buying opportunities. We've kept everyone on the right side of the market here. That's the whole idea for this analysis, to keep you on the right side of the market, to be able, and if it does that, please go ahead and hit that thumbs up right now. I'd appreciate that. If this analysis helps give you clarity in your own, then it's, at the end of the day, it's going to be improving your bottom line. Bitcoin, by the way, just continues to consolidate. It just continues to consolidate, right? And we'll see. We're just waiting. We've been in this holding pattern. Gold, again, trading around 1,800, looking super solid over here. It's buy gold on pullbacks, buy silver on pullbacks. I'm looking at least for the next 6 months to be a continued weakness in the dollar. Here you could see the dollar, since being rejected at 97.73, continue to weaken. It's now possible testing these also June lows, right? Could you foresee the dollar breaking its June lows? Would the equity markets then be breaking their June highs? Probably right now, the weakening dollar is definitely helping risk rally right now. We're not seeing any. If we get above 97.73 up here, right, at that point, we have to be seeing the dollar potentially about to break out to the upside and start strengthening. Above 98.30, we have a pretty strong dollar. Things are changing in the system. That doesn't seem to be the direction we're going in right now. But again, we'll watch the charts. We were looking for a breakout to the upside. Why in this channel, we were looking for a breakout to the upside. That never happened over here. And instead we broke down. But as soon as we broke down, breakdown, look at that. Let me clean that up for you so you could see what's going on. That's the trend line over here, this green line. Once it broke, here's the retest, confirms the broken support as resistance, the entry, and then, we've been weak dollar minded for the most part since I participated in this on the Euro US dollar short. So where does that leave us? Silver. We didn't take a look at silver. Again, just like gold, tracking here towards the high of this swing. And silver looks super and uber bullish. I know a lot of you in this area were able to step in and establish positions. It continues to be that we are just getting ready here, in my opinion, not only over the next 6 months, 12 months, perhaps even maybe as much as 24 months in gold and silver, or longer looking at now a bull market impulse. So continue to position as such. I saw this comment on yesterday's video and immediately I had to go ahead and like it. It said that people say that we've been through this bubble and that bubble, and I'm sure they have, but nobody has been through this degree of quantitative easing. We aren't done going up, up, up. And the greatest trick the debasers of currency ever pulled is making people think that Amazon at $3,000 per share with trillions added to the Fed's balance sheet is more valuable than Amazon at $2,000 per share without all of that printing. This comment was just absolutely fantastic. Here we're looking at for the third day in a row. You can see here this dark black line over here. This is the Dow Jones outpacing the Nasdaq for 3 days in a row. Nasdaq is in green over here, and that's a good thing. Now, but if you just scroll out a little bit, and now you're looking from the beginning of June, the 9th through the 14th today, you're looking at the Nasdaq leading the way here. You can see the Dow down here lagging behind, down actually 3%, while Nasdaq is up 7.8%. So it's nice to see this rotation out of tech today into the industrials. It's really nice to see. And also you're seeing, again, gold was bid up throughout the New York session. Once again, dollar was weak. You also see Bitcoin, same thing, bought up off its lows. Bitcoin's still holding that $9,000 level as it's been for quite a while. It seems like perhaps this consolidation is just wearing out one side. We'll see whether we get that break to the upside or downside. Looks to me we're about to head to the upside. Here you're looking at, and this is going back here yesterday, where you're seeing that large 10% drop here in FANG stocks, which have now started recovering. I want to bring your attention towards this quote from Jamie Dimon from today. He said that this is not a normal recession, that the recessionary part of this we're going to see down the road. He said that we'll see the effect of this recession. We're just not going to see it right away because of all of the stimulus. And that seems to be the direction we're headed in right now. It does seem to me that we're risk on. We're seeing equity prices rise. We're seeing assets be inflated. You're seeing that flow of funds into commodities. We're seeing gold up. We're seeing Bitcoin remaining stable, ready to start its bull market phase. All precious metals joining. You're seeing that weakening dollar, and you're seeing that strengthening gold, not just versus the dollar, but all fiat currencies over here. I'm not seeing, though, as Jamie says, because he said we're not going to see, because of the amount of the stimulus, we're not seeing those effects right away. How much longer? That's the whole game right there. That's what we're looking at every day, trying to figure out how much longer we're buyers, and when we're going to see the effects of the recession. We're going to see the insolvencies. We're going to see the credit markets rolling over like dominoes. At that point, we're going to be positioning ourselves risk off. Whether that's through the Japanese yen, Swiss franc, or it continues to be gold, we'll find out as that's unfolding.
Day on Wall Street, positive across the board. Take a look at that climb just in the last half hour of trade or so, making it the Dow's best day since June 29th, a surge of more than 2%, 557 points higher there on the close. As far as what led the Dow higher, the best performers, United Healthcare and Home Depot and Apple, those three contributed the most. S&P 500 up 1.34%, got every sector higher there into the close. Energy was leading all day. This was not one of those tech-driven rallies. You had groups like industrials and materials also in the top spots. The Nasdaq closing up 1% there on the day as tech did eventually join the rally. It was pretty broad-based there in the end.
All right, everyone, I hope you have a beautiful day. I look forward to seeing you all tomorrow. That's it, everyone. Take care.